Hello, everyone, and welcome back to the Cedi Investor. In today's episode, we have two banks to discuss. Firstly, we are starting with Cow Bank PLC. This bank has just released their Q1 2026 report, financial report for the first quarter. I'm no longer a shareholder of Cow Bank, but I've got to say, I was pretty impressed with the results for the first quarter. We are going to discuss further about this report and my expectations for Cowbank moving forward. Also, we are going to be talking about GCB Bank. About 2 weeks ago, I made a video saying that there are two high quality companies that I want to buy consistently for the next 3 months. And one of those companies was GCB Bank. Now, obviously, since I made that particular video, the price of GCB has been rising and rising. So we're going to go, a little bit deeper into the numbers with GCB and the price of GCB. And surprise, surprise, they have decided to pay dividends. That one Ghana Cedi dividend is finally getting into the pockets of investors and shareholders. So I think, overall, as a shareholder, you should be happy about that news. We'll discuss further about that as well. Make sure to like the video, subscribe. Please subscribe if you haven't. It will really help me out. And share to people you think would be interested in this sort of video. I'll really appreciate it. And let's get into it. Starting off, like I said, we have Cowbank, and this company has released their Q1 2026 report. Now, before I even talk about the reports, I would want to give a round of applause for Cowbank. Do you know why I'm doing this? Because I'm pretty impressed with what they've done. Not just the financials of the company, but also the releasing of the Q1 report right now. Right now, we are in, April, almost ending of April, where we should be seeing most of these companies release their Q1 2026 reports. But still, we have some companies where the full year 2025 reports, annual report, is still even not out. And I think this video should serve as a warning to these companies and Ghana Stock Exchange, because what is genuinely happening? As a shareholder or as an investor, the only way we get to know what's happening within these companies is through their financial reports. That's the only way we get to know what's happening with these companies. The CEOs, the board members, the directors, these people are not coming out to have a conversation with us. As owners of these businesses, imagine you own, a church or car or something, and you never hear anything about how the sales of that business is going. If you are getting customers, if then the drivers know everything they okay, the money they make, and you're not getting any information until the end of the year, or does that make sense? No, you, as an owner of a business, you want to get constant information, because this information is what you make financial decisions and investment decisions on. So these businesses, massa, every day they see the GSC giving extension, massa, then for sure this jokes aside, but honestly, Ghana, our market, I know, is relatively new. It's not as in depth and as advanced as the US markets and other markets abroad. But please, this information is relevant, and it should be timely as an investor for us to use to make our investment decisions. So please, just like that's why Cowbank, another one, releasing Q1, right after Q1, right after March, almost in April, end of April, you release it. And we up to now, some big companies got a full year annual report for 2025. They haven't released. It's pretty bad, pretty bad. But sorry for the rant. Let's get into the reports for Cowbank. Looking at the income statement, the core business net interest income, Cowbank went very high from 86 to 171. Quite good. Net fees and commissions was quite beautiful, amazing as well, from 43 to 66. Ended up with an operating income of 325 compared to 168 for 2025. So their total comprehensive profit was 106 in the K1 of 2025 compared to 35 for K1 2025. But obviously, just because of their dilution in terms of shareholder number, the earnings per share was relatively lower compared to last year, despite the earnings growing by such a huge number. So the earnings per share was 0.13, but the basic earnings per share for Q1 2026 was 0.1. So still relatively lower because of the dilution, which was obviously expected. So looking at the numbers, I would say I'm quite impressed. Cowbank has done relatively well. It looks like after the whole rights issue and recapitalization, they are heading towards the right direction. This is what, as an investor, after a bad rights issue in terms of heavy dilution, you would want to see the company heading towards the right direction, using that money efficiently and effectively. And this seems to be what Cowbank is doing. But again, one thing that I will point out is these numbers in terms of percentage, you would say, hey, Charlie, Cowbank grows revenue by 200%, by 300%. I don't know the obvious number, but like it's a huge percentage. One thing I would say is that it's more of an outlier than what you should, expect just because of base effects. Last year, Cowbank's earnings, especially in Q1, Q2, was relatively bad. It wasn't great. You can compare it to most banks; they were not doing that good. So now, after a recapitalization and the strengthening of their capital buffers, having more monies to work with, seeing such huge numbers, if you compare it to pre rights issue, it doesn't really tally. Like there's a mismatch. I don't know if you get what I'm trying to say. So yes, the numbers looks good, and I'm going to praise them for that, because if they didn't look good, it would be like it would be massacre. A massacre for Cowbank. So the numbers does look good, but in terms of comparing it to 2025, I don't think that's what you should do. Like it's a mismatch. The base effect from 2025 is very very low, very very low. So it would by standard make anything right now, any slight improvement seem so much or so great. That's what I'll add. Again, looking at their financial position, their balance sheets, obviously the same situation, did quite well. Total assets went up. We have investments in securities going from 5 to 8 billion. So they are investing way more. But interesting, loans and advances to customers dropped massively from 2.2 billion to 1.14 billion. And taking into consideration the statements that the top directors within Cowbank made at the end of 2025, this seems like a mismatch. They were stating how they were going to, tap in more into loans as one of the main things to make revenue. And it doesn't seem to be that way. Now, probably they have cleared a lot of the bad debts, which you would see when we go into their MPL and other key metrics. You will see that it has improved massively. So maybe it has to do with that, clearing the bad debts, maybe making recoveries in terms of that as well. Deposits from customers went from 9 to 10 billion. Good, 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 good. Especially taking into consideration that last year their customer deposit was going down. So it's good to see that number go back up. And again, looking at the key metrics, capital adequacy ratio 17.2% expected after the right issue. Non-performing loans, this is what I was saying, from 45% to 15%. So and we are seeing that the loan base itself has reduced massively. So we can see that it's clearly them taking away most of those bad loans, the loans that were being defaulted out of their loan book size. So that's what has dropped the non-performing loan ratio down from 45 to 15%. Um, Moving forward, I want to see them giving more loans and seeing how efficient they will be with those loans. That's when I would say, oh, in terms of loans, Cowbank is getting on track. Liquidity ratio 90%, good. They've improved from the 68% in 2025, means more money to take care of short-term liabilities. Leverage ratio good again, 6.4 compared to -6. So as an investor in Cowbank, I would say you should be happy about the direction that Cowbank is moving, and hopefully they are able to maintain the same direction or position in terms of their business, maintain this performance consistently. And over the next 2 to 3 years, I could see some dividends coming to into your pockets. Definitely not now, but if they are able to sustain this performance, yeah, you should be expecting dividends within the next 2 to 3 years. In terms of the stock price of Cowbank, currently trading at 0.86 Ghana cedis. Obviously, this year it has been very volatile in terms of stock market performance. Starting the year at 0.64 Ghana cedis, went as high as what 0.94, went down to about 0.69, and now it's going back up. We are seeing that the bullish momentum is gradually picking up. I sold my shares around the 0.88 level, yeah, around March, around that side. So I'm no longer a shareholder in Cowbank. Again, made my stance within Cowbank so clear. I said if they are able to sustain, performance, I could see a recovery within the business. But my issue, my key concern is, it comes back to opportunity cost. And that's where we move towards the next bank I'm talking about, GCB. Because again, yes, Cowbank can do relatively well, and I do hope they do relatively well. Because again, my story with Cowbank has been very amazing. One of the first companies I invested in, the first actual company to pay me dividends. So, I would love to see this company do relatively well on the Ghana Stock Exchange, especially also taking into consideration that Cowbank is part of the few banks that are actually Ghanaian owned. Most of the banks on the Ghana Stock Exchange, they are banks which are originated from other countries like Nigeria, Togo, so many countries. So having a Ghanaian bank itself, do well on the stock exchange, I think it's just a nice thing to see. So hopefully they'll be able to recover as well. But in terms of the opportunity cost, I just felt that there are other companies which would be performing way better, and the opportunity cost of me investing into Cowbank, waiting for them to recover, instead of investing into those companies at even cheaper prices, I felt, it just didn't make sense for me to still be invested in Cowbank. And that's why GCB is one of the companies I said I'm consistently buying. Looking at the stock price of GCB, it's currently trading at 31.77 Ghana cedis. And that's pretty great over the past week. GCB started the year around 20 Ghana cedis, went as high as 52 Ghana cedis, but it dropped massively again around 24 Ghana cedis. And this when I started buying around the 24 Ghana cedis level. This when I even made a video that GCB is a company I'm going to be consistently buying over the next few months. And right now we can see the earnings per share of GCB 7.7. Looking at the P ratio around the 4.09, for a P with an expected growth of about 15 to 20%. That's my expectations. We could see this P ratio around 3.2. Yeah, even relatively lower if they're able to grow more than is expected for 2025. In terms of my thesis behind the business, you can go and watch my previous video. Like, I went extensively on GCB talking about everything in terms of the fundamentals, in terms of my thesis behind the business. So I don't want to talk about that in this particular video as well. But again, GCB held its annual general meeting on last week Friday, 17th of April, and they went through a lot of things under this thing. But the most important thing is that they declared a 1 Ghana cedis dividend payment for the financial year 2025. And I said in my previous video that one of the main reasons people were selling out of GCB was because of the dividend payment, the 1 Ghana cedis dividend payment they made for 2024. Because GCB was unable to pay that 1 Ghana cedis dividend, or Bank of Ghana prevented them from paying the 1 Ghana cedis dividend due to the SOL limits breach GCB went through, a lot of investors were unhappy. I think they were in constant communication with Bank of Ghana, and finally a 1 Ghana cedis dividend payment has been declared. So it's good for you as an investor. Again, we invest into these businesses with our hard-earned money. So to make returns from these businesses, either through capital appreciation or through dividend payments, is always amazing to see. So again, as a GCB investor or a shareholder, you should be happy with this particular news. I'm pretty impressed with the prospects of GCB moving forward. Also, if you missed the annual general meeting, it's live on YouTube. They released everything on YouTube. They have it on their platform, GCB, the annual general meeting. So you can go through it if you missed it. But that's it for this particular video.